Alrighty, looks like we are just about ready to get started. Appreciate everyone taking the time to join us today. We have a really awesome Twitter space lined up on the tokenization of real world assets, the next big crypto narrative. And we have a really awesome set of guests that have been gracious enough to join us today. So, just a quick rundown. We'll go over some administrative stuff. We'll kind of introduce our guests, and then we'll go into have each guest introduce themselves. So just to kind of get everybody a little excited about what to expect, we have an awesome list of guests lined up today that I will just give a quick introduction for. So first we have Doug Leonard, who's the CEO at Hifi. We have Jason, who is the head of BD at TProtocol. We have Aaron, who is a contributor at Goldfinch. We have Amos, who is a core team member at TypeIt. We have Brian Esposito, who's CEO and co-founder of Esposito Intellectual Enterprises. And we have Edwin Mata, who is the CEO and co-founder of Brickken. So incredible lineup of guests that we have joining us today. So before I get us going, I do have a few things. As always, we do have to give a little bit of our disclaimer. The information provided is for general informational purposes only. All information is provided in good faith. However, we make no representation or warranty of any kind, express or implied, regarding the accuracy, adequacy, validity, reliability, availability, or completeness of such information. The statements or opinions expressed in this event are those of the authors and do not necessarily reflect the views of Bitmart or its affiliates, and shall not be considered professional financial investment advice. All crypto investments are highly speculative in nature and involve substantial risk of loss. Past, hypothetical, or simulated performance is not necessarily indicative of future results. The value of digital currencies can go up or down, and there can be a substantial risk in buying, selling, holding, or trading digital currencies. You should carefully consider whether trading or holding digital currencies is suitable for you based on your personal investment objectives, financial circumstances, and risk tolerances. So now that we got that mouthful out of the way, I do want to mention that we also have launched a Learn to Earn program. So this is just a reminder that before we begin, our Learn to Earn program is still ongoing. The Learn to Earn program is a unique NFT-based initiative designed for our loyal off-the-chain AMA listeners. In this program, you can earn our stamp NFTs by actively participating in Bitmart's online AMAs and various learning events, both on and offline. These stamp NFTs serve as proof of attendance and engagement. As a reminder, stamp NFTs are not tradable. However, they hold tremendous value because for every 3 stamp NFTs you collect, you can exchange them for a special NFT called Learn to Earn time capsule NFTs. These time capsule NFTs symbolize the experiences you've gained as a listener of our off-the-chain AMAs. Unlike stamp NFTs, time capsule NFTs are tradable on the Bitmart NFT marketplace and can contain prizes worth up to 50 USDT. You can choose to open your time capsule NFTs, in which case the 3 stamp NFTs will be burned, or you can list and trade the time capsule NFTs on the Bitmart NFT marketplace. For instructions on how to collect your stamp NFTs, please check out our information provided on our pinned tweets. But remember, stamp NFTs are only eligible for listeners who stay for at least 30 minutes and who fill out the Gleam form provided in the pinned tweet. So a really awesome, interesting initiative that we have launched here at Bitmart. But I think now is probably a great time to get started. So I want to kick off this tokenization of real world assets, or you might hear us say RWAs. I want to kick this off by kind of passing it to each of our guests that have joined us today. And I guess first question we can start off with is would love to hear just a brief introduction about yourself and then about your company or project. So would love to start off with Doug from Hifi Finance. Would love, pleasure to meet you, Doug. Would love to hear a little bit more about yourself and about Hifi.
Yeah, thanks for having me on. So Hifi is a fixed rate lending protocol at its core, and we've got some supporting projects in our ecosystem as we go after kind of what's exciting in the crypto space right now. And so we've got our Crown Ribbon brand, which is basically us trying to go after performance horses and tokenizing them and bringing them on chain. And then we've got a couple of other initiatives that I'll get into. But my background is engineering. I've been in the blockchain space, since 2010, and early Bitcoin adopter, Ethereum adopter, and have really enjoyed both the speculative and the actual building aspects of this technology, and think that a lot of this stuff is going to really change the way we interact with finance and assets into the future. So that's a bit about me.
Awesome. Yeah, appreciate the context there, and super excited to hear more about what you guys are building at Hifi. Let's pass it over to Jason, who is the head of BD at TProtocol.
Thank you again for this opportunity. Hopefully you guys can all hear me. So my name is Jason again. My background is more in UX. I've been in the crypto space from the early 2017, 2018, but more of building in 2022. I'm happy to be here just rubbing shoulders with all the giants of the real asset companies and protocols today. So about TProtocol, we're more of an on-chain RWA liquidity hub. We're expanding our core moat ecosystem by harnessing the T-bill yield. And in this case, we'll also be providing a diverse lending opportunity through permission and permissionless pools and protocols.
Nice, super interesting. Excited to dive more in there. Would love to pass it over to Aaron from Goldfinch.
Hi team, this is Aaron. Thanks for having me on the Spaces. I'm a senior credit manager for Goldfinch, which means I'm the one primarily dealing with all our real-world borrowers. I come from a traditional finance background in private markets, both private equity and private debt. And what we do at Goldfinch is basically the same thing I used to do off-chain, which is originate new deals, providing capital to off-chain borrowers who have nothing to do with crypto, with the difference being that we're providing the loans in USDC and collecting payments on-chain. And so when we originate these new loans, we're effectively tokenizing them by representing your ownership in the loan as a token. We've been operating for a few years now and currently have an AUM of about $100 million to borrowers in over 25 countries around the world.
Yeah, super excited for kind of this intersection of, maybe call it, real world assets and the implications for like DeFi and stuff like that. So I think there's a lot of cool stuff that I'm excited to kind of dig in there. But would love to pass it over to Amos, who is a core team member at TypeIt.
Thank you so much, everybody. My name is Amos. I have a background in product management. I've assisted with basically helping build out Forbes 230 founders projects, working with some large enterprises. I've been in the space also since 2010, originally discovering Bitcoin, thinking it through PGP encryption, like thinking it was a privacy currency originally, but later discovering it was a store of value as I got older. But basically over at TypeIt, we're the first ever Web3 keyboard, which basically covers SocialFi, GameFi, the creator economy, and encrypted messaging. So essentially we are just an encrypted keyboard with decentralized data storage, which can be kind of translated as an RWA in a sense.
Awesome. Super excited to learn more there. And then let's pass it over to Brian Esposito, who is the founder of Esposito Intellectual Enterprises.
Well, thank you very much. I appreciate Meta Era and Bitmart for putting this great discussion together. As you mentioned, Brian J. Esposito, CEO and founder of Esposito Intellectual Enterprises. It is a holding company that I've built over the last 20 plus years of my professional career. Currently consists of 108 companies, over 200 joint ventures from around the world, and proudly operating in over 25 different industries. So long story, very long. I've been in the crypto, tokenization, and digital asset space since the beginning, but not as a speculator in other asset classes or cryptocurrencies like a Bitcoin or Ethereum, but building these blockchain technologies within our own holdings, understanding how these assets can be booked on a balance sheet and how they can properly boost your valuations and bring in new incomes, communities, and earnings in both a public or a private company landscape. So it's one hell of a journey. I've made every mistake you can think of. I've built a great arsenal of relationships from banking, accounting, regulatory, and compliance. And we've rolled out some really unique, one-of-a-kind digital assets and through this journey. So I appreciate the opportunity of being here and speaking with you all.
Awesome. And last but certainly not least, we have Edwin Mata, who is the CEO and co-founder of Brickken.
Yeah, hello everybody. So yeah, my name is Edwin Mata. I'm the CEO and co-founder of Brickken. Formerly a mergers and acquisition lawyer out of here in Europe. So I was doing restructuring of companies. 2016, jumped into the space, and ever since then I haven't looked back. 2020, created alongside my team Brickken, which is digitization of real-world assets. We specialize on the creation, the distribution, and the management of digital assets. So we have a token suite that is plug and play for companies to be able to enter the tokenization space.
Awesome. Now that we have all the base introductions, now I would love to move into, I think real world assets is a very broad term. I think there's a lot more that encompasses real world assets. I think typically people start to think about homes and real estate and things like that. And I think there's a significant more. And also there's a lot of just that category. So I'd love to kind of work on widening people's view on what RWAs can be. So would love if we can, we'll go speaker by speaker, but I'd love if we could kind of provide examples of how real world assets can be tokenized on the blockchain, like what that looks like. And then what are some advantages and potential drawbacks of this approach? Let's start with Doug.
You bet. So yeah, like you said, a lot of people just think about like houses in the real estate market. But really you can tokenize any existing asset, whether it be art, bonds, stock. In our case, we're doing horses or collectible cars. We just tokenized our first collectible car, the 1952 Volkswagen microbus. And so the way that this is working behind the scenes is there has to be some sort of framework for enforcing ownership rights or property rights that bridges the blockchain ownership of the NFT or token and the real world. When you've got to go and collect on bad debt, you need to get custody of that asset. And so what's happening is you're getting either third parties involved in the actual custody portion, where a third party will hold on to the asset and then they'll issue the token that then can be consumed by DeFi providers, or you're using some sort of structured legalese that gives a DAO or a group of people some legal rights that they can go after and use an existing court system to enforce those property rights. And so it's important to get all that stuff, defined up front. And so that, in the case that you do have to, go after this property and liquidate it, that everything is in order and, you're going to have to, go through the muddy process of a 1-year delay with a typical legal battle. But at the end of the day, if you're doing it at scale, these things are just a cost of doing business. And so that's with our car, we actually ended up filing a lien with the state where the car is registered. And so we have these systems already built out in our existing financial system. And so now it's just finding the proper way for the right people to be able to pull those levers at the right time and then get access to the broader markets, the finality, and the transparency that blockchain offers.
Yeah, I love the context. I think you guys have a pretty differentiated view. Collectible cars, horses, things like that. So love the insight there. Yeah, would love to pass it over to Jason with kind of the same concept, right? Like, give us some examples of how real world assets can be tokenized on the blockchain, like some, maybe differences beyond some of the basic things people think about, and then what are some of the advantages and drawbacks that you guys are noticing.
Before I talk about more of the specifics, I'll just first talk about TProtocol instance. Right now, we have been, since our development of version 1 earlier 2023, we've been trying to build a framework first. And we feel like that is the core concept to be able to at least punch that out onto mainnet and see how everyone operates it and see how it's actually running live. Of course, we have multiple more versions coming down the road, but having the framework set in stone and having all the connections made between our supplier and working on the platform to the retailers. That is something that the core functions of tokenization, and getting that set in stone first is more important. But then now I'm talking about something more broad. It's like I feel like the archaic concept of RWA, just as what Doug has said, has been within the fixed asset real estate and equity and allowing the collateralization of loans and capture yields. We have definitely seen a huge rapid growth stemming to more tangible assets, artworks, right? And intangible ones like IP itself. So I feel like the act of tokenizing assets will fundamentally change and definitely disrupt the current ecosystem. For me personally, I'm a lot more interested in real estate as well. And one of the previous concerns and back in the day issues was definitely the low liquidity and flexibility of properties, right? And now with tokenization, we can definitely be being able to assist of accessibility to others. Digital tokens can reflect ownerships. And all in all, this will reflect more of the spirit of crypto, right? In terms of innovation, risk-taking, and to all of the users, they'll be able to use it. But there's also still some of the key drawbacks or disadvantages, right? What if off-chain issues, right? Property ownership still has to be confirmed by the deed of the third-party managers. What about payments and rent? How would that be worked? But what if there's also issues of building issues or force majeure or any type of disruptions within the process? How about oracles? How would that work, as they need to stay in touch? And one interesting fact is, let's say you do tokenize an entire building into NFTs or stuff, and what if that gets hacked? So there's still many aspects that we currently do have some solutions. I would say like this would also go into more wear and tear and just some of the degradation parts, but it's something that we're still continuously figuring out, utilizing the right technology to solve these type of issues. Yeah. But sorry, the one last thing to add, I think like in a sense, RWA would be a bridge or like a multiplier effect on the current TVL of DeFi. I think that if we can incorporate these assets into the ecosystem with a degree of it only has some lower degree of correlation to the market too as a whole. So people might just run into RWA as a type of safe haven.
Definitely. Yeah, I love the kind of different pieces that you guys are kind of bringing together. So yeah, would love to pass it over to Aaron from Goldfinch, and just give us some examples of how you guys are seeing real world assets tokenized on chain, and then what are some of the advantages and drawbacks you guys are seeing.
Sure. So we're originating loans to the real world. So effectively, we're creating a new asset that is backed up with all the normal off-chain documentation that you would think about: security agreements, facility agreements, all that kind of stuff. And so where a token comes in is basically, it's our way of representing that you own a participation in the loan. So if you give $1,000 into a loan, you are issued an NFT that actually looks like a loot card, and it says you've given $1,000, and basically the existence of that NFT in your wallet is what allows you to interact with our app and reclaim interest as it comes in, reclaim principal as it comes in, reclaim your rewards. And so it's a really novel way of, rather than having some dusty piece of paper showing that you are a signatory to a loan, you now have a token that represents that interest and can be used as effectively your passkey into the protocol to get all the payments that are coming due to you. Now, there's so many advantages that we see with this relative to traditional finance. Like, I've spent most of my life in traditional finance kind of complaining about a lot of the inefficiencies that I think blockchain solves. So one of them is you can trace all payments on chain. So a borrower makes a payment, there are smart contracts that routes that to the various owners of the contract. And so you can account one for one every single dollar that's being repaid to you. The other thing that's beneficial is that if you take a decentralized approach to real world assets, you kind of take a little bit of the profit motive and a little bit of the fees that are needed to originate assets off chain. And the IMF suggests that you're saving somewhere between 6 and 10% on yield by just not having to worry about the real world intermediaries. The other thing I would add is that I just think this really democratizes access. Because off chain, it's so hard to invest in these deals. People only go after really big whales and accredited investors, whereas on chain people can contribute $5 if they want to, and so it's giving access to this really private source of capital to the world. The disadvantage, I would say, right now is just like adoption. It's really hard to pitch a business like this with the word blockchain in it. People kind of assume blockchain is somewhat scammy. In some ways, that's a legitimate concern. As Jason was saying, there's hack risk, but then there's also just a general block. You hear blockchain and you don't think, let's look through to the end product. So I would say over time, we need to figure out, are these products that we should be selling to crypto investors or traditional finance investors? And we basically just need the whole industry to get up to speed on what this asset class is, which I think this Twitter space is a reflection. People are interested, and this is something that's probably going to be happening in the next year or so.
Yeah, I think not enough people think about the kind of infrastructure aspect, right? And there's just not enough kind of pieces that, and then obviously it sounds like Goldfinch is kind of helping bridge that gap. We're not going to get to every asset being held on chain and tokenized, without kind of this middle ground that looks like you guys are pioneering. So super excited what you guys have been working on, and would love to pass it over to Amos. And just, same question. Right? You give us some examples of real world assets that you guys are seeing tokenized on chain, and then some advantages and drawbacks.
Yeah, totally. I think like real world assets can kind of be divided into like two categories. The first kind of refers to like narrow real world assets, which includes securities, real estate, artwork, precious metals, environmental resources, and other stuff. And that can kind of just allow increased asset liquidity while also like managing transparency through blockchain's immutable ledger. I think on the other hand, there are a lot of games and like experience to economy projects with actual apps that can also be considered a broader form of real world asset. For example, TypeIt is a fully encrypted keyboard with decentralized storage capabilities. So all data is stored locally on the user's phone. And it also offers just like an alternative keyboard option for people, which they can actually add to their iOS or Android, which they can switch on and off if they want. And I don't know if a lot of people knew this, but like a lot of keyboards built into your iOS actually save keystrokes. A lot of the time own your data. And I think this is a new kind of broader form of real world asset where the keyboard kind of empowers people to allow them to store their own data. And we are working on a future roadmap of being able to collect that data and having users be able to monetize it as well.
Awesome. And next up, we have Brian from Esposito Intellectual Enterprises. Again, same thing. Would love to get an idea about, real world are kind of tokenized on the blockchain. What are some of the kind of areas you guys are focusing on, and then the advantages and drawbacks?
Yeah, absolutely. So we're across the board with a lot of the different industries, but some specific projects that are exciting is one of which EV Hotels and our CEO Ken Patel on the tokenization and financing of traditional hotels or resorts, and utilizing this as a new way of building in guest experiences, allowing that facility to bring everything that crypto holders want to see, and that is the utility of their token being able to be used in a hotel environment for meetups, for paying for your lunch, for paying for your room, and then also incorporating their NFTs. So as they go and check into the hotel, their NFTs can light up throughout the lobby, and then as they go into their room, so they can have that full experience and understanding of how these can actually be applied in real world. Another great holding is H2O Securities and utilizing tokenization of getting water treatment facility plants up and running in a third of the time, and allowing for capitalization from people that want to be in this space but don't have access to those types of investments. And lastly, a big one that we have moving strongly is virtual stacks, and it's the tokenization of people's passions and skills. So we have the full support of icons like Patrick Mahomes, Drew Brees, Luke Bryan is our music ambassador. So incredible icons from around the world see what we've built at Virtual Stacks for people to be able to support and fuel someone that has a skill. And think of it like a GoFundMe and a person going public in the same regulated environment or tool. A lot of these are backed by security tokens. That's where I've been moving strongly forward. INX is my partner in that space, and utilizing a regulated exchange for crypto and security tokens where projects like these can be listed. Aaron hit a lot of key points. Now, the biggest issue and what we've been working on for many years is education. There is a great community of crypto and token or digital asset investors out there, and people that really get excited about this space and put money into it. But the real wealth is still sitting on the sidelines. And again, Aaron hit some key points where you hear blockchain, you hear crypto, even digital asset or security token. A lot of these generational wealth, they go deaf because they don't understand it. They think it's a huge risk. They hear people like Warren Buffett's in the past say it's not real. So there's an intimidation, and they don't even want to participate in it. But oddly enough, like trading stocks online in the late 90s, it wasn't a mass adoption. It took time. Now it's so simple. Everybody signs up and they buy their stocks or bonds with an online or a mobile platform. And we'll get there. But the biggest issue right now is definitely education, and a huge hurdle is projects that don't have real value. They kill the momentum. So it's so important for exchanges or any type of marketing campaigns. They have to get behind real projects with real seasoned leaders that have real capabilities of earning any type of upside. Because the more of them that just don't go anywhere, the more of them that are pump and dumps, then it's harder for these real great projects to have any momentum.
Yeah, I think you brought up a handful of really good points there. Kind of echoing Aaron's point about it is a little early, but I love kind of looking at the parallels and previously, and I think the kind of trading stocks online in the 90s is kind of a great parallel where there was just general apathy. I think the other one is like kind of using your credit cards online is kind of the little more common one. But yeah, it's just like it's just the idea that this is such an early nascent technology, and it's going to take time for people to really understand. And where even people that spend all of their time in the industry, it still takes quite a long time to really wrap your head around all the different areas of disruption there are. And definitely kind of real world assets is a big piece of that. So appreciate the answer there. But yeah, last but obviously certainly not least, Edwin from Brickken, just kind of same question. We can wrap this one up. How real world assets can be tokenized and advantages and drawbacks you've seen.
There's a lot of great feedback here. Impressive, the panel. So basically, I think that we have to go through education because tokenization there's a misconception. For example, there's a lot of noise around like building, but how do you tokenize a building? Who is issuing the tokenization? So the approach as to what is doable is that basically, yes, everything can be tokenized because if a company has a contract directly on the asset or owns the asset or can have access to the asset, I mean, that's a contract base. So in reality, tokenization, at least on my conception, it's all about tokenizing the contracts that provide you with ownership or some kind of fee, such as interest if you're doing debt or if you're doing an equity, so the company owning the asset. So the possibilities are immense. Kind of like tokenization is just a new form of digitization. Loving the 90 concept, kind of like stuff went digital, but they were off-chain, but yes, tradable online. And now we're doing kind of like the version 3.0, where everything can be on-chain, accessible, transparent. You reduce management fees just because of the transparency and the layer of how the blockchain itself is built. You can provide trust because of the mutability. You can provide connections to different instead of going to one bank, you can collateralize on different protocols because they're all open and you can move from one to another. So there's a lot of possibilities, and obviously kind of like at the worldwide level. So this kind of like opens the scope as to how tokenization works, how funding works, how crowdfunding works. And obviously, a lot of the tokenization we're learning also from the crypto space. Kind of like that, instead of just having like investors, you also have a community. So you can build loyalty programs. You can build kind of like this kind of experiences. Hey, you invest in my hotel, you get access for like a 1 week on the summer just because you're an investor. So I'm giving you this utility. So I do think we're still kind of like in the early stages, but now we're solidifying the position and also trying to play to the market out there. Like tokenization, it's yes, we're early, but definitely it's going to be the present. The more projects are starting becoming tokenized, the more institutions start jumping in. We're hearing that about funds being tokenized, using this as their next vehicle to create a fund on chain. Banks, there was an example of a Swiss bank getting tokenized. Casper Labs just announced that they're going to be tokenized by NX. So there's a lot of movement around, and I mean, I think educators are doing a great job and solidifying the position. But without means, we're still in the very first early stages, but with an exciting roadmap.
Yeah, I think there's one kind of key point that I want to draw attention to, which is, I think there's this kind of off-chain aspect that is obviously highly underdeveloped, and I think you brought that up, Edwin, about kind of who owns these contracts, who holds these, who ensures that the kind of pieces of the contract are being met and that yields are being given. And I think as an industry, one thing that I found that I feel might be holding us back is like kind of this the focus on decentralization on chain, and I think like we can still kind of create kind of credible neutrality on the layer one level, but I do think that this kind of focus that everything has to be totally decentralized. Like obviously we can't have physical like off chain assets that are settling on chain without some kind of middlemen that are there to kind of help smoothen over that process. And at least until we get to the point where we have the infrastructure in place where we can have kind of documentation done in like a kind of permissionless, decentralized way. But I don't think I don't think that should hold back the industry. And I think that's a general theme that I've been seeing by some of the answers, is that there's a lot of a friction that's being created by this on-off chain situation. And I think that the answer tends to be like we have to wait because we don't want to kind of sacrifice decentralization. But I think as we see a lot of these like L2s start to spin up and kind of these alternative blockchains, that there's an opportunity for it to be not necessarily totally decentralized, but that doesn't mean we still can't leverage a lot of the core pieces of like kind of the blockchain infrastructure. So I think that's just an interesting observation that I think a couple people hit. But I think, yeah, that was an awesome round of answers from everybody. I do want to kind of start to move in a little bit of a different direction. So, me personally, I'm highly fascinated by this intersection of kind of DeFi and real world assets and kind of the implications that those can create. I think DeFi is slightly volatile, right? As anyone who's kind of interacted with it knows, yields tend to be high during periods of price increase, but as we see right now, yields have fallen pretty considerably due to reduced activity and overall kind of through the bear market. So in light of this, my question it really is, what connections do you guys see between real world assets and DeFi? And additionally, do you think that real world assets have the potential to create like a larger stability or yield generation within the DeFi space? So let's start with Doug.
Yeah, so I think if, there's a couple of extra assumptions that, end up being a part of the equation for the volatility of real world assets on chain. And really, I think it comes down to who are the parties that are the issuing entities? Can they be trusted? And is there any other regulatory risk or operational risk? Is their business healthy? I think we've seen from USDT, USDC, these stable coins, that there is a reasonable amount of tolerance for centralized entities to come in to issue a token that's backed by a specific type of asset, and to have some amount of trust in the space. And so I think that we'll see a similar thing happen with real world assets. And if those entities work with professional market makers, then anytime there is this kind of unpredictable volatility on chain, then it represents a huge opportunity for that professional market maker to kind of sweep in and buy low yield, or excuse me, higher yield assets, and then maybe even flip them into the traditional finance world and redeem them for the actual assets backing them. And so that opportunity, I think, always exists, and it's just a function of the market size. And so I think anybody who's setting up one of these systems has an incentive to try to have any on-chain and off-chain world try to match, or there's an incentive equal to the size of the opportunity to arbitrage that opportunity away. And so it comes down to trust, transparency, and kind of building that brand. I think Circle has done a really excellent job with that in the stablecoin space. And so I think we'll see a bunch of kind of escrow issuers that hold on to the custody of specific asset types, building a brand name for themselves, and in helping to reduce that kind of volatility that we as DeFi participants have grown used to. I think when you really look at it, we are in the minority because the user experience of DeFi has so many hurdles to overcome, and so I expect that anytime that there's volatility here, that there's going to be somebody who's going to go redeem and then just flip it into the traditional markets until eventually DeFi is larger than those traditional markets. So great arbitrage opportunities when that happens, until all the liquidity and rationality shows up.
Yeah, I love the answer there, right? It's kind of like going back to kind of efficient market hypothesis where, if we have everything held equal, if everybody has access and opportunity, that the market will kind of speak for itself, right? Market makers will arbit, opportunities will open, and it'll kind of create kind of true transparency and equality in the market. So, appreciate the answer there. Would love to pass it off to Jason and kind of same question, right? Curious to hear your thoughts on the connection between real world assets and DeFi, and kind of the opportunities unlocked there, but also, do you believe that real world assets have the potential to create like more stable yield generation in DeFi, and what are kind of the implications there?
Just to bring up something that I brought up before, I think looking at the narrative in the DeFi perspective, I just said that RWA is like an extension or a bridge, or just to increase the DeFi ecosystem. So RWA definitely can help out the overall size. I think there's a huge room to grow comparing to its current market worth. We could talk about like fixed income securities, which is also one of the typical RWA. And Blockworks talked about it could be estimated to 127 trillion. And then last year, Boston Consulting Group talked about how the tokenization of these assets could become 16 trillion by 2030. So if you can just capture a fraction of that, it will help grow DeFi industry by leaps and bounds. And obviously, this will have to be done through a more safe, secure, trusted, branded, and education to talk about these yields. And for me, not trying to sound shilly, but we at TProtocol work more about the U.S. Treasury bonds. And this is something that we would like to just have to teach more people, because it's something that most people, retailers, and just people that are not, I just say, like really in the DeFi, they fail to recognize that we are using one of the most secure and low risk type of assets. And if you're pairing such a low risk, secure assets and since we're talking about stability, right, you got a product that is already, that has a strong history bound and a proven track record, then it definitely can be in correlation of bringing more stability into this yield generation today. And what we've seen right now, there's a slight inverse yield that's happening with the short-term treasury yield with the long-term. And I think we just could capitalize on this at the moment, right? In May and June, we've seen APIs hit about 4.5 to 5%. I know a lot of DJs like to see double digits. However, if we're trying to push a more sustainable APY. And so I think these are the buzzwords that would catch on to retailers. More to bring about this for us, just looking at the treasury yield with such an API and seeing that on these Dune dashboards that there is already a lot of money being invested in this and a lot of interest being paid out. So definitely there's a product fit in a sense. And last of all of these this type of target tokens are already backed one-to-one too. So I think if we can bring this into secondary market liquidity that is compatible with a DeFi, then it will make it easier for retail investors to learn more about this asset and utilize and harness this thing. last of all, I just want to say that, DeFi in the past has always been about interest income, right? And that gap is still there due to Terra back in the day and just recently multi-chain too. Not trying to drop any names, but just to show that there are these, niches that needs to be fulfilled. So if we can reliably like onboard these type of RWA, then definitely could be an arm to the current DeFi conditions. And not only that, in a sense that also reaches out to tangible value, such as like digital products, and that means that it will instill greater participant trust.
Yeah, I love the way you framed it as like, DeFi is very interest driven, and people are looking for kind of, maximize the interest. And I think the reason for that, and I think you kind of touched on it, is that it's just more transparent and efficient, right? When there are no middlemen, the access that you get to yields increases significantly. So adding in real world assets into this is going to kind of open up significant yield opportunities that, I agree that I think, retail and institutions are going to get really excited about. So appreciate the answer there. Would love to pass it over to Aaron from Goldfinch. And I think you probably have a really interesting perspective of this, which is, kind of this connection between RWAs and DeFi. What kind of connections do you see there? And, what do you think about the opportunities that real world assets have to kind of create more stable yield generation in DeFi?
Yeah, it's a great question. And I'm looking at our Dune dashboard of the protocol right now. And basically, since the bear market started, our yields have been incredibly stable at about 12% per year, while you've seen a lot of like native or original DeFi protocols basically fall off the cliff, only able to offer about 2% yield on stable coins. And so I basically think the overall like traditional DeFi space is basically disguising price appreciation as yield. It only works when prices are going up and traders need the liquidity of your money and are willing to offer you good interest rates. But as a financial strategy to grow your wealth, that's not a very efficient way of doing it, right? Because you have to be allocating your money across all different types of things, doing yield farming, whereas, in a traditional sense, you want to be investing in assets that are slightly more long-term and are offering you stable yields. And so I think the proof is in the pudding. The fact that we have yields that are uncorrelated to crypto. I call our borrowers and they're like, oh, what? Bitcoin dumped? I have no idea. I don't even track that space. And so the fact that you can be getting yield that is completely uncorrelated to crypto is something that I think is a massive sell of RWA. And just to think about like, if DeFi is going to become finance more broadly, it's going to have to expand into new products that are mainly RWAs. I think the corollary I try to draw is that if the current system of DeFi, which is 99% of DeFi, which is taking a crypto asset and getting loans against it, its corollary in the real world is stock-based financing. And in the debt world, that only represents 1% of the entire debt universe. So if you assume that, this massive part of what we call DeFi today is only a tiny part of what financial activity looks like, bringing real-world assets on chain is really the way you can get sustainable yields and start allowing people to keep a lot of their wealth on chain. In our view, like the ideal scenario is someone goes in, makes quite a bit of money off of crypto, and then they try to diversify into new assets that provide them stable yields and are on the blockchain, but not actually correlated to trends in the blockchain. So I think it's really imperative to have real world assets be able to offer you those kind of consistent yields. Otherwise, you're very much at the whims of the market, as well as kind of pro-cyclically exposed to movements in the market and price appreciation and depreciation.
Awesome. Yeah, appreciate the kind of thorough thought there and kind of insight that you guys are seeing from someone so kind of integrated in this particular kind of intersection. So would love to pass it over to Amos again from TypeIt. Same question, right? What are the connections that you guys are seeing between RWAs and DeFi, and what do you think the implications for yield generation, stability, and kind of the opportunities created by this intersection?
Yeah, definitely. I think RWAs is like a new form of kind of like hedging the volatility of like the DeFi market and kind of its unpredictability. Kind of like traditionally in the real world, RWAs, kind of like real estate, anything from like art. Basically, it more so has like a stable kind of more sustainable cash flow. With DeFi, we kind of also eliminate a lot of like intermediaries present in TradFi and in a lot of real world assets, kind of lowering the barrier of entry to participants. But also as like a payment processor and like basically sending out those dividends, it's extremely efficient to use DeFi. And that's really what I'm most interested in, is just like as a payment processor, actually getting those funds to you and being able to like reliably invest in something on a protocol that you can actually like look into the code, see that your money's there, see that the asset is pegged on chain, whatever it is. If it's like a property that has been transferred to an LLC, that in the LLC says if you buy this property, you basically, or if you buy this NFT, you own the property, essentially, excuse me. So yeah, I think it can basically reduce a lot of portfolio risks in DeFi. As Aaron kind of like said, a lot of DeFi is kind of just based around like Ponzi, really, and basically just trying to capture a yield from that is very hard, and it's not sustainable at all. So extremely bullish on being able to actually invest your money on chain and use it as a payment processor without any intermediaries, which also cuts a lot of expenses and operational costs in TradFi as well, kind of like relying on like rent-seeking third parties to escrow your funds.
Yeah, I think that there's a couple really interesting things. I think that the hedging piece is something that's not talked about enough, where, you know, we kind of get this completely uncorrelated access to yield. And I think there, you know, while there are a lot of Ponzi-nomics on chain, there's more than enough. I think there are a few interesting differentiated like real yield sources, you know, whether that's, you know, maybe in some like kind of these trading protocols, they kind of create real yield through kind of trading fees, they're staking, which I think now is kind of established as like a pretty legitimate yield source. I think there's kind of the interest from borrow lending, and I think once you add in this entire uncorrelated kind of piece to it, I think that creates a lot more efficiency, it creates a lot more safety, it creates a lot more optionality. And so, you know, even if that's like interest from, you know, housing and mortgages, or if that's like T-bills and treasury bills from large governments, like I think these are all interesting opportunities that I think you touched on. So appreciate the answer there.
Oh, wait, can I just add something I kind of forgot was, sorry, really quick, is for like an app, for example, for like a DApp, creating like mechanisms outside of like earning. So like net negative sinks is what we call them, and like token sinks that basically are just using your token to purchase things that actually benefit you and you want to, unrelated to actually earning more. And like, I think that's a huge sustainable measure of like an app and a good product is basically using that to purchase more things within the app.
No, I love the framework. You know, like I have a similar framework, like sinks and faucets, right? Like you want sinks to you know, kind of eat coins and not let coins kind of hit the market back, and then you want faucets that kind of you know, that kind of slowly kind of bring tokens into the market. And you know, if you have you have too large of a faucet without any sinks, that's how you get massive inflation and kind of the Ponzonomics. But you know, if you can create a system where you have a slight faucet that can kind of help alleviate some kind of fundraising issues or kind of capital issues, but then you have a large enough sink that can kind of take a lot of those out of the market. So I think purchasing and kind of creating the purchasing power to kind of use tokens for other types of assets and financial tools is like a really big sink that can add a lot of value and have a lot of value creation. So yeah, I think that's super interesting. I'm glad you kind of poked back in and added that piece. But yeah, I would love to pass it over to Brian. And kind of get your take again on, you know, this connection between real world assets and DeFi, and if you believe that you know, real world assets can kind of what do you think real world assets can kind of add to DeFi as far as stability, yield generation, efficiency, all of these categories?
Yeah, great question. Since you first asked it and hearing everybody's answer has been great, but you know, the idea of volatilities, I have to assume has been back since bartering and the idea of supply and demand. having another medium as a financial mechanism to buy into a real world asset, in reality, it doesn't change the idea behind market conditions. What is the value of that property in that market, in that city, in that town? Is it going up or down? What I do love about the ability for DeFi and these to open up channels or floods of capital into things. For example, there's a great project called LODE, LODE, and it's the empowering global access for gold and silver through a stablecoin innovation. So that LODE token and what they built there actually goes into acquiring mines and storing of physical gold and silver. So you actually have a real backed asset there with the idea of bringing in capital from people all over the world. So you have the flood of ways to finance things, but now in that environment, you're creating jobs, you're buying equipment, and you're offsetting the potential of a giant collapse or high risk volatility. But with a smart investor, an opportunity, volatility is great. It's a correction. Corrections are great. Corrections allow people to buy homes in certain markets. Corrections allow people to go in and buy assets they never had the funds to do so. So I'm all for a good correction, especially when things are out of whack, which present day it's happening all over the world, from the price of milk and eggs, the price of homes, the price of certain stocks, valuations of companies. That's why bubbles happen. That's why things collapse. But having new access to capital, I think of, imagine 2008 when Lehman Brothers was collapsing. Imagine something like this to be able to be turned on where hundreds of millions of people could flood in and put $5, $10, $15, $20 as new liquidity to save an institution like that. That's where I see hopefully things like this going, because certain leaders, certain government regulations, certain things cause an institution like that to collapse, and not getting the backing of the federal government. They didn't get the blessing. But imagine if the blessing could come from the people. Imagine if we could come in there and fix things and take over things and correct things and provide fresh new liquidity. That's where I see the future of this going. And there'll be nice small hits and wins here for people to be able to say they own something that they never owned before. But I'm looking at it in the masses and billions of people to be able to come in and push something forward, save something, correct something, and provide a really good, strong footing for something to build upon.
Definitely. Yeah, I think there's a lot of kind of interesting angles that we got to hit there. So excited everyone got a chance to hear that. And yeah, would love to pass it over to Edwin, and then we can wrap this one up. Just on the connections you see between real world assets and DeFi, and then do you think that this has the potential to introduce stability in yield generation, and what's kind of the impact you see between this intersection of real world assets and DeFi?
Yes, I would like to say that we're not there yet. I mean, there's a pricing on the real world asset and the data that is offline that we still gotta generate as to how we put it online. No? So we got like oracles or proof of reserve. There's great innovation on the space, but there's still the difficulty of kind of like how you blended it in both, because one click can really be offset in a quick matter. So you may have like, I don't know, let's go for a real estate. A meter square that is whatever 1,000, and then on chain there's a movement that it goes like to 1,500. So it's kind of like there's a deviation from the real world valuation to the real one, and that can offset a lot of things. So that's the mechanics of something that we have to solve. But without a doubt, when that is solved and you have like the real world and its digital twin being priced in the chain, then you can really tap into the whole DeFi ecosystem. So just kind of like the collateralization, the lending, or whatever. And will that affect everything? Yeah, I mean, we need to bring stability into the markets. No, I heard somebody saying here, kind of like, yeah, the double digit earnings. I mean, healthy portfolio can have like 2, 3, 4%, and that was considered, yeah, you know how you're a good trader or you're a good asset manager. And right now, kind of like there's a sector in the crypto, like if you don't do like a 20, 50x, it's like that's a mess. But that's kind of like part of the things that we have to bring into the ecosystem, you know? Kind of like the stability. And I am keen to see how the real world asset being a real tangible asset, not necessarily has to be a real world, it could also be a digital asset itself, but something that is really really backed. No, I mean, I think the regulations even are being upgraded, especially here in Europe. Kind of like the security markets law are establishing how you have to deploy securities or equity or debt on chain, and you have to follow these protocols. So there's a lot of compliance and regulatory aspects that would even bring stability into the sector. So I am all in favor for kind of like these 2, 3, 4, 5 next years as to how we're gonna price in the RWA into on chain. And I just believe that right now we still gotta innovate on the space and make sure that everything that is priced in or the valuation is true to the essence of the asset itself.
Awesome. I think, yeah, right now is a great time to kind of switch gears a little bit. Um, so I think, yeah, I guess the question is actually pretty simple. I'm just curious to hear your perspectives on kind of the impacts of like the physical issues that we may face in regards to having real world assets. So like whether it's physical wear and tear, degradation, depreciation of real world assets, and then the impact that that kind of has on, uh, you know, when it's collateral in DeFi, right? So, you know, if you have a home that depreciates, you know, kind of 5% year over year, like what, you know, the kind of impacts that those have. So kind of, I guess it kind of goes back to, you know, the larger point is essentially what are the issues that you guys see that might come up at this intersection, and the impacts of how, kind of having real world assets as collateral in DeFi. Let's go ahead and start with Doug.
You bet. So, you know, right now we, you know, face this directly. We've got you know, this VW microbus that's a vintage vehicle, and you know, it's on display right now in a museum in California. And you know, something might happen. Someone might come and try and make a statement with it, or the building might burn down. And really, the first way you can hedge this sort of thing is with physical risk is just insurance. So for the amount that we have on our Oracle for what its value is, there's an insurance policy, and you know, the protocol and one of its designees is listed as a additional insured on that insurance policy. When you look at our the performance horses that we are working to bring onto, you know, bring on chain, you know, one of those horses might die or get injured in one of their races, and so they're also insured. So the, you know, our highest earners or most valuable assets are insured. And then the next way that, you know, the next tool you have access to is just scale. You know, the first horse syndicate we're bringing on chain has over 100 horses in it, and so, you know, one or two horses that don't perform, you know, you're not going to really see that on the, you know, overall, like impacting the overall value of that horse syndicate. And so, as you know, with real estate or any type of asset, as you get to larger and larger scales, and the asset itself becomes more of a commodity, it's just a numbers game. And so you plan for a certain amount of loss from, you know, the you know, just regular wear and tear, or weather or accidents or anything that's going to impact the value of those assets, and then you're hedged, you know, with the law of large numbers. And so these are, you know, the main ways in which we see, you know, having access to a hedge is just access to scale, and then making sure you're properly insured, and making sure your oracles, you know, can get updated in time to represent the real asset values. So if liquidations need to happen, they can happen in a prompt manner, and problems don't compound.
Yeah, I think that's a large general thing that we see, which is that, you know, when you have these like highly integrated systems like a blockchain, that these issues do tend to compound at, you know, kind of inopportune times. But yeah, would love to pass the same question on to kind of Jason, which is, you know, more or less like, you know, what are some of the issues that you think, you know, we might have as we come to this intersection of kind of real world assets in DeFi?
So my take on this was a bit different. I just feel like I like how Doug talked about insurance and scalability. That's definitely a key aspect here. I think here more comes down to the current technology and contracts itself. I believe that right now, since we're at the point where a lot of customers just say like, yes, please, to tokenization, but the full potential of tokenized RWA assets lies in the post-tokenization, but that's where a lot of the wear and tear and different type of degradation starts to begin. And I think it's quite difficult with where we are, as we are in a niche in a very infancy stage. So we'll be tripping over a bunch of potholes and obstacles. But if we can utilize some of the relevant or like alpha stage technologies to some extent to ensure security on Kartik's side, we could probably slow down the process effectively in a temporary matter. Two protocols that I do like to look at before was like Tokenly, where they try to add more liquidation models due to the lack of liquidity in real estate itself, or maybe finding more interconnected liquidity providers that they kind of patch up that particular liquidity issue. And then another one would be like, what about compliances that comes with RWA type of tokenized assets, right? We'll need something that be better to bring a better type of digital identity along, something that's seamless, something that's more UX. So it's like, I can't really say there are, to me personally, for technology, I can't say that it's a very effective one, but I think we can patch it up for now until something really comes in. Like on-chain ID is definitely doing something interesting with creating self-sovereign identity on the blockchain, where all the private data are off chains and trusted with a type of proofs of data validation on the blockchain itself. Again, that's like tokening and on-chain are definitely working on something. And back then, I just think that one important thing that I had back in the early 2023 of working with a friend trying to utilize relevant technologies such as ZK proofing, right, and lurk languages, or some type of multi-party computations, as we've seen with Web3 auth, like just being on top of these type of RWA, maybe that would help out to some extent. And one core example could be where users can generate proofs of their off-chain property ownerships and rental histories and mortgage records using ZKP, and that would streamline the real estate transactions and reduce fraud, and also enhance the property-related transactions. And we kind of seen a little bit of this happening at Hats Finance, where they have automatic escrows. So I just feel like it's like leveraging the correct technology for now. We could kind of like slow down the wear and tear. I mean, I kind of stir this to a different angle. But I think in the end, the key of overcoming any of these challenges would still have to be striking a balance between centralization and decentralization.
Yeah, that was incredible insight. I think there were just so many points, but I think the key point that I really would love to kind of highlight for the audience was kind of the DID side, right? Like decentralized identity, kind of creating new kind of social or kind of government identity layers on chain. And then I think that it brings a whole bunch of unlocks, right? Where when people talk about like, under collateralization, which is a huge aspect of banking, and like better ways to create credit systems and credit worthiness. So yeah, I mean, I think that's a really awesome point that you brought up there. But yeah, we'd love to pass it over to Aaron and, kind of stay on the same question. What are some of the kind of larger issues that you're seeing at this kind of intersection of real world assets and DeFi?
Yeah, I think one of the most important things is bridging, off-chain realities and on-chain realities. And, once someone provides a loan to a borrower, you get a snapshot point in time analysis at the time you make the decision to invest, but you also don't want to just send your money out into the ether, no pun intended, and you want to be able to track what's exactly happening off-chain. And so one of the things that we spend a lot of time doing is making sure that the borrowers off-chain continue to report the risk to the people who have invested in them on-chain. And one way we do that that's pretty crypto native is we have data rooms that can only be accessed in a token gated manner, whereby you have to prove that you own the NFT of a loan in order to get access to that information. So that's one way that you kind of can help bridge those two worlds. And then coming back to this like decentralized identity point, another thing that we do is we're a compliance forward protocol, and for anybody to interact with the protocol, to provide loans or to redeem, you have to have an ID token in your wallet that's basically a soul-bound NFT that proves I've gone through this KYC process. I'm a person who can interact with this protocol. And having that not only allows you to interact with the protocol, but it also gives you all the rights people are entitled to off-chain. So I think there is a need for verification of off-chain identity and kind of bridging the worlds of, using the infrastructure on-chain to administer debt, but at the same time making sure that people have a good look through to how their rights are protected off-chain is really important.
I think that's really interesting. You guys at Goldfinch get a really interesting perspective on this intersection and some of the issues that kind of the industry faces. So appreciate you kind of sharing the context. And yeah, I would love to pass it over to Amos. Same question, right? What are some of the issues that you guys are noticing at this intersection of kind of real world assets and tokenization and collateral and DeFi?
Yeah, definitely. Not my total area of expertise, but I can kind of just list a few things from my experience. I in my past experience, I have been involved in the tokenization of Murakami paintings and some kind of valuable art. So I think I have a kind of a small perspective. I think verifying and monitoring the asset condition pretty regularly, if that's through a reliable oracle or proof of reserve. Any way to really check how the asset's doing. Kind of an example, I used to be really into kind of finding historical NFTs and how they were created. And there's one from 2015, I think it was called Flower Coin, which basically tokenized flowers in real time on the blockchain and basically streamed the whole life of the flower on the blockchain. I think it was one of the earliest NFTs ever created. And basically it was pretty cool. I mean, just to see that, but it's not really you probably couldn't do that for every asset. So, I mean, basically using smart contracts is escrow to protect lenders with an escrow inside it, enabling fractionalization of ownership for better asset control, potentially adding a layer of insurance for protection. With periodic audits and evaluations. So I think there definitely needs to be more infrastructure here, just to basically monitor things outside this trustless space, essentially. There isn't a lot of infrastructure really yet.
Yeah, again, I think that last point is the one that echoes, right? There just isn't the full infrastructure there. Doesn't mean we won't get there, but yeah, appreciate the thought there. Would love to pass it off to Brian. And same question, right? What are some of the issues that you're seeing at this intersection of tokenization, real world assets, and DeFi?
Yeah, for certain real world assets, you touched on earlier on the question, you have the idea of depreciation. Depending upon the capital source coming in, there's certain fractionalized owners may not be able to take advantage of that depreciation depending upon where they live or their tax rules and regulations. So can you sell that tax liability or that depreciation to somebody else that can claim it? And what are the legalities around that without giving up your ownership? A lot of real-world assets require maintaining, upgrades, a huge list of things that require additional capital. So does that mean the fractionalized owners of those real-world assets have to do what would be known as a cap call and come in to maintain their level of ownership? Or does that mean somebody else would have to come in and would everybody have to be diluted down? So those are some real-world traditional issues that any real world asset has to maintain. Now, where is the future capital coming, or who can claim the depreciation? And then for tracking of these assets, as was just mentioned, there's great companies like Nodal, that's the world's largest wireless network. They're used tremendous in this world for blockchain certification of proof of authenticity, proof of location. So unfortunately, there's still a disconnect with traditional insurance and being able to make sure that that asset is where it is, if it's in transit or on like the classic VW bus. I'm sure maybe it goes on a road show and a tour, being able to track that bus along the way, and as it pops into new museums to be on this great show for people to experiencing it, there is a liability. And what happens to to that asset, and being able to track and locate it is key. But unfortunately, a lot of traditional banks, traditional insurance, it's not easy to articulate the need for this because they're not used to it. They don't understand it. So there's this, again, back to the beginning, this huge educational gap that once we figure out, the tools and technologies are there to help, but it's getting institutional and legendary firms to get behind it is the tricky part.
Yeah, I couldn't agree more there on that last piece. But yeah, appreciate the answer. And then yeah, finally, we'd love to pass it over to Edwin from Brickken and kind of same question. What are some of the kind of issues and that you see might arise from this intersection of real world assets and DeFi?
Yeah, I'm gonna follow up on Esposito because he did bring out a lot of the situations that already happen off chain and off digital. Kind of like all these kind of like proof of ownership, who's the maintenance, who's the manager, and all of that. So that's kind of like a big situation that tokenization still has to develop. And here in Brickken, we're trying to adopt that, kind of like give the full solution as if the company is already on chain, because how are you gonna be, who's gonna be in charge of the depreciation of the management of the asset, or how is it gonna influence if you're like on a loan mechanism, the payment of interest because you just spend, I don't know, a couple of K fixing, I don't know, in this case, the fridge or the tire and everything. So, and then on the investor side, that kind of like knowledge is not there yet because they're still expecting kind of like a throughout the life of the digital asset or the real world asset that got digitized, kind of like the steady flow of whatever, kind of like if it's interest aspect every time the 10% or aspect all of this. So there's still a lot of not uncertainty, but just kind of like chaos still being building around the issuance of tokenization and digital assets just because of the expectation being built around it. And without a great infrastructure, kind of like if the company or the issuer of the tokenization does not have the necessary tools and functionality to act, to react, to communicate, does not have a platform for investor relationships. I mean, let's put it as an example. Let's say that the real world asset got tokenized and the company got sold, and you have like a bunch of, even though it's syndicated or not, you have a bunch of shareholders. One of them doesn't want to give back the token. So, wow, are you going to confiscate? Are you going to do a drag along? Are you going to then, what if other one wants to jump in and wants to tag along? So, even though the digitization phase for the real world asset is, I believe that the next big hurdle that we have to overcome is kind of like the whole management of the digital asset, the corporate actions, the governance, the investor relationship. And that's just kind of like one of the first layers, and then the DeFi. Kind of like, I believe DeFi in this case, kind of like the climax, kind of like if the whole digitization, the distribution, the selling, or the onboarding investor, and then the management of the treasuries, the governance, the investor, and the corporate relations, then you can pursue kind of like that connection for like instantaneous what, like yielding? Are you going to go for a DeFi? Are you going to go for a CeFi? What kind of use are you going to bring to the DeFi? Who's going to connect you? Is it going to be the self-platform, or is it going to go through a third-party platform? So, I mean, I want to believe that we're going to take a little bit longer to kind of like stabilize that connection or pure connection with our RWA, because if we don't provide first the infrastructure for that to occur, then it can be absolute chaos. So for me, kind of like it's kind of like the steps, kind of like we know how to tokenize an asset. There's no more kind of like innovation of that. Kind of like how it is performed, it's kind of already, it can be common knowledge. Then the distribution phase, yes, regulatory-wise, compliance. It's the same as if you're issuing a security. I mean, the rules don't change just because you're digitizing an asset. You still have to be compliant from the jurisdiction that you're issuing or the jurisdiction of your investor, but that's not even because of the digitization. That's because securities laws or whatever. And then we have to go for the management, and then we have to go for the DeFi. So it's kind of like we're specializing and standardizing a couple of things, and maybe then we can pursue kind of like the standardization of how RWA is really going to perform in a DeFi, where all your ecosystem that you just built around the tokenization of the asset knows and understand what is happening. So then we go for transparency and information.
Yeah, super interesting there. I think this kind of perfectly leads into our next question, which is probably everybody's favorite topic, which is regulation. So I'd love to kind of get the panel's perspective on the regulatory compliance challenges that are associated with kind of bringing real world assets on chain, and maybe how you guys are kind of dealing with that issue or working, with that issue to kind of solve it. So let's start with Doug.
Yeah, so with our VW bus, it's owned by a single entity who has a single owner. And so it's just a private asset that we've tokenized on their behalf. It's not being sold. And then, in the event of liquidation, we have one of our trustees who will liquidate it on behalf of our DAO. And then when we get to our horses, we're actually filing with the SEC to do a Reg A plus exemption public offering. And so, you've just got to play by the rules that are in place. And I think if you want to approach this with an abundance of caution, then you take the existing models, play by those rules, and, it's going to take a little bit longer. It's going to be more expensive, and you're going to have more lawyers involved. But I think that's the right approach today is, try to innovate within the rules that are there. And then I think as these, as we go to court and there are additional precedents set, or we get additional clarity from the SEC, then we'll be able to move with a lot more scale, a lot faster. So I think you're going to find, these types of shoehorn approaches where we're, fitting the existing system into something that maybe it wasn't totally imagined for. But with that, you get certain protections and a certain amount of predictability for the actual token holders of these assets. So that's our approach. And I think that once a clear winner is established in the space, that everyone's going to, flock on board and copy their legalese and their legal framework, and kind of all centralize on a specific set of rules or approach to this.
Awesome. Would love to kind of pass it over to Jason and kind of get TProtocol's kind of perspective on the regulatory compliance challenges that you guys are facing, that you guys are maybe seeing in the ecosystem when it comes to real world assets and bringing them on chain.
So in general, I feel like there are three things that most policymaker regulators won't really negotiate away. We talked about investor protection, market making, and last of all, where this stands true with AML and KYC. And so since we're doing stuff regarding the T-bill and yield, has been, I would say in a sense, a very big pothole that I don't want to say it's like a roadblock, but more like a potholes that we're finding ways to fill that with soil and kind of make way for this, because in light of these gray areas that still needs to shed some light on, people can see it as like a threat, but we also can see it as an opportunity to grow. And then other, like Doug says, that becomes the standard and everyone can kind of catch on too. So for us, we work directly with another, we have a very close partnership with the CFI institution, and we negotiated the framework and worked around the framework and just been building upon that. Hence, we're able to have what we have today. But still, it's like this whole KYC AML, again, I talked about, it's extremely hard to negotiate away. So that's something that still needs to be worked on in my eyes. And for us, it's because we're able to work with a CFI that's already SEC compliant, and already has they're able to utilize the treasury bond, and because of that, we're able to present this particular interesting product to the retailers.
Yeah, definitely. I love all three of the points you brought up there. Would love to pass over to Aaron from Goldfinch and kind of get your guys' perspective as well about like regulatory compliance and the issues and the challenges that creates for integrating real world assets on chain.
Yeah, I think while there's uncertainty in the regulatory landscape, it's best to adopt an abundance of caution when, embarking on these projects, which is why we've prioritized so clearly being a compliance first protocol. So as I mentioned before, for any participant to interact with the protocol, they have to be issued a soul-bound NFT that proves that they've gone through an off-chain KYC process that gets refreshed every 24 hours. And so we know that everybody who touches our protocol is compliant. and is able to, is not moving money around for unsavory actors. The other thing I would say is that in order for RWAs to work, you have to be compliant, because every single actor that you're working with off-chain requires that level of comfort. So for example, I primarily cover our Asia business, and we've done quite a few deals in Singapore. But in order to do those deals, I went to Singapore, got legal counsel to be able to write a report about what the regulatory framework is there, have set up all this infrastructure for them to be able to access the KYC information, have worked with legal firms to draft our loan agreements so that they're specifically compliant with the on-chain mechanics of our loans. And so there's just a massive amount of demand, even from the borrower side, to make sure that you are acting compliantly and that this is actually a sustainable way for them to raise capital. So I think there's a lot of compliance discipline that already exists in the real world that naturally will impose itself upon, real world assets on chain. Combine that with the fact that there's a lot of regulatory pressure on the blockchain space in general, means that you really have to make sure you're putting compliance first, and have all the information that's needed to make sure people are interacting with your protocol and using your product in the best way and in a compliant way.
Yeah, I definitely agree that there definitely will continue to be a pretty big market for highly compliant kind of services in this space. So appreciate the answer there. And then, I would love to pass over to Amos, and same thing, right? How are you guys looking at kind of the regulatory compliance issues that you guys might face, and as you guys try to integrate real world assets?
Yeah, totally. So we basically use blockchain to solve proof of ownership. So we basically facilitate the IP of users as their RWA, which is all stored on their own phone, what they type, the emojis they create, as well as their keyboard themes. So basically, like anything on their phone, the NFT acts as a UID for the user. And I guess in different jurisdictions, data privacy is still very unclear in the blockchain space. A lot of RWAs are traditionally recognized as securities or currencies, but data privacy and data regulation is very, very unclear still. So basically, we created our app to facilitate decentralized storage, essentially, where everything is basically stored on your own phone, with end-to-end encryption as well, to basically protect everything the users write. And facilitating those keystrokes as well, what's your IP that you type? You should have ownership over that. That should be an RWA. And there's just very little infrastructure still around that. So we kind of are using that as a frontier to kind of innovate.
Do we have you there, Brian?
Yeah, I'm here. Can you hear me?
Yeah, perfectly. Yeah, would love to. Yeah, regulatory compliance. Would love to get your guys' take on that.
Of course, it's always in the forefront and the most important aspect of everything we do. Dear friend and colleague for many years, is a former commissioner of the SEC, acts as our legal advisor on a lot of our projects, Mr. Roel Campos. He and his firm and his relationships have been extraordinary in helping us know what we can and cannot do, and how to properly play in this environment with new tools, technologies, and solutions such as blockchain. So you always have to think, what are you legally allowed to do? I don't like this gray area, or thinking that you can just say you're sorry. If things are a security, it's cut and dry that it's a security. It's a pretty simple description. So if you fall within that, that's okay. There's great support exchanges, again, like INX, who just got a great investment from Republic. So it's moving in the right direction. INX has a program or a booklet called the INX Way. It's great to read, so you can see if you fall in that, or if you're building something that falls in that, to stay in the lines of laws and rules and regulations. And for me, I'm hate using the word visionary, but I always am building technologies throughout my entire career that are new, that are different, that I know the market needs, but there's laws and regulation that prevent it from maybe being implemented. That doesn't mean you can't keep building those. Like, do what you can do today in today's landscape and environment, stay within the eyes of the law. And when that catches up to where you want it to be and what you want to bring out to the market or to the world, like, have it there ready and start to slowly introduce it along the way. And again, work with great legal, great accounting, great compliance. Markham is a phenomenal accounting firm that we use. It's a top SEC auditor. They're also a firm that's forward thinking. And, go online, look for great advisors in this space to help navigate you and help support you. Always go after your dreams, always build. But the last thing you ever need to do is have stress or uncertainties and lose sleep because you may be in trouble one day. It's not worth it, but you can still accomplish building great things within the eyes of the law.
Love the sentiment shared there. So appreciate appreciate the answer there. And lastly, we have Edwin. And yeah, same question, right? How are you guys thinking about regulatory compliance challenges in this kind of category?
Yeah, so I would like to do a quick introduction because, yes, legality is my field, been in practice for over 10 years. So kind of like it's when you're in legal or everything, you have to understand that there's no such thing as that kind of action activity has no legality in the back. There's nothing that it's illegal. It's illegal, but I'm saying that there's always some framework that can be applied to absolutely everything we do. So during the past couple of years in blockchain, we see kind of like saying, oh, there's no regulation behind it. No, that's not true. You always apply something by the concept of similarity or something that is quite near to the subject at hand, so you have to apply that by analogy. So the situation that we're building now as to how we're reaching the regulation right now, it's kind of like now through this specialization. So finally, like different countries from a regulatory point of view understood the fact that they needed to either create a specific law or upgrade the ones existing just because people were kind of like applying its own analogy and it had to be defended in a court of case. So it could take years and everybody was still doing that. So the pressure point for some public administration started becoming too high. For example, of that, it's kind of like the SEC and XRP. But that was happening throughout. Like in Europe, here where I'm based, it was happening in different countries. Everybody was trying to have its own opinion when it was a utility, a security, defining what was a utility. And everybody, and even countries here in Europe that is based on the European Union, so we got like all these countries aligned, there was divergences. So some companies were going to a different country just to be able to apply their own legality because there was an opinion base that made them seem more lean to what they wanted to do on chain and how not. So if we understand that everything already has a regulation in place and we just need a specialization, it's kind of like now is the duty of obviously the public administration, but also from the private market to kind of like build that bridge, because regulation in itself is super slow. Like digitization technology, like one day you build an AI and the next day you like building AI bots and everything. So it's very slow. And for us, kind of understanding that the fact that obviously the governing bodies are not here in Europe, they started doing something which was quite amazing, which is it's happening now. I think they're going to open one in the United States, which is kind of like a regulatory sandbox. So kind of like institutions and public administrations say, like, we're going to build a testing phase or a financial instrument, but it's a financial sandbox where it's not necessarily legal, but we're going to test something that we need to also understand as administration what the private markets are building. So most of that, kind of like the first sandbox was created in the UK. A lot of neotech banks started being built in there because they were trying to say, like, I'm a bank, but I'm not really a bank. Maybe I don't need a license even because I'm subcontracting the services of a bank. So they started building all of this. And basically what we did in Brickken to test kind of like, can we provide this solution as a plug-and-play solution and for companies to digitize their own assets and tokenize on their own, we went to the financial sandbox of Spain. So for 6 months, we started like analyzing alongside them and the Bank of Spain kind of like the approach of the tokenization and the issuance of securities and the digitization of equity or even debt or profit sharing. So us in blockchain, it's not that nothing is doable. Actually, everything is doable, but it's about adopting the correct framework. And many times we're scared of even requesting information to the governing bodies. It's like, hey, can I do this? Because we're always going to say, like, no, it's going to be illegal or not. But I think if we want to build something, like you need legal assistance and you need to hire people that really understand the legality of what you're trying to build. If you're in DeFi, by all means, maybe go for a banking lawyer. Like, don't just go to any lawyer. You need to go to the specialized ones who may understand, but at least if they are able to adopt and understand how the off-chain, offline thing work, they can maybe mutate and understand how the online, on-chain thing works. But the most important, crucial thing is that we really need to be super clean because we're in the eye of the hurricane, right? Everything that we do is kind of like, oh, crypto boys and whatnot. But in reality, we're trying to transform full ecosystems and full systems and digitize them. I mean, that's crazy, but it's doable. So I think it's just kind of like me establishing that it is the duty of the founder of a project to seek legal assistance, to seek like legal guidance, to approach a framework, to establish protocols of compliance if there's a breach, or if you're supplying certain securities, who can buy, how can they sell. I mean, and that's a lot of work. But if we don't perform like that, that's when everything goes wrong, and then we start giving excuses again to all these administrations or the market itself saying, look at that, they're always doing it wrong. So it's kind of like it is a duty of us, especially in the RWA and the tokenization field, to always secure the best kind of advice that we have. If it's auditing our nano accounts, maybe, if it's kind of like creating that contract framework for how people are going to acquire their RWA who got digitized and tokenized, yes. But I mean, this is kind of like, it's not a question, especially in this field. It's kind of like, it's a need, and we need to really pursue that. And as we start standardizing more and the market itself starts understanding more, then maybe that's going to also affect how regulations happen, because if they don't have access to information or nobody's doing it in a way that they understand, then they're going to regulate on their own way. And their own way might not even be correct, as it happens, because in the end, they're just politicians.
Yeah, love the inspired answer there. So appreciate appreciate the answer there. I know we are getting up on time, but I do want to hit one last question and give all of our incredible guests who've taken the time out of their obviously busy days to join us today. I'd love to give everyone an opportunity to kind of just give us an overview of your project's future roadmaps, any upcoming updates, anything that the audience should keep an eye out on. Let's start with Doug.
You bet. So with Hifi, we are, have a dual mandate to bring on real world assets and tokenize them. And so there's a lot of just experimenting with the frameworks, the legal frameworks that we need to get these assets tokenized. And so that is, squarely where our attention is, bringing NFTs into our lending protocol and bringing real world assets into our lending protocols and driving TVL for Hifi. So that's we've got our horse syndicate that we're hoping in the next couple of months the SEC will get back to us. We can offer it to retail traders in a compliant way, and I would look forward to just more TVL and more assets getting added to our protocol.
Awesome. Yeah, that's a great update. I'm personally excited to get a chance to kind of look at Hifi a little more. Let's pass it over to Jason, and same thing, right? Future roadmap. What are some of the things you guys are working on? Any updates?
So to make it really quick, right now we're working on a V2, which is going to be the whole lending aspect. And with the current market, I feel like at the current status quo, this particular treasury yield adoption is quite hot. So we're working in sync with the current buzzwords, and there's the heat on this is great. So we're going to be able to launch our V2 relatively soon, within I would like to say end of this month, next month. There, in terms of diversity, we're building again the lending aspect, and from the user behavior, it's hot. People like this stuff, and we will definitely build more incentivized model for our users. So stay tuned for more alphas in our Discord, and after that, end of the year, we'll be looking into more of working with dexes and perp dexes. So everything is in line, and yeah.
Awesome. Super exciting. Appreciate the updates there. Let's throw it over to Aaron. And yeah, I would love to hear about what Goldfinch's kind of roadmap looks like right now and any upcoming updates.
Yeah, sure. I think in the short term, something that we're very focused on is the concept of crypto abstraction. Most people who invest in real world assets aren't crypto native, and we basically are working towards a world where we don't have to advertise that we're a blockchain company. We believe in the tech itself and think that it provides the right rails for real world assets, but we want to make the process of getting people to invest in a blockchain protocol for this US dollar private debt a lot simpler for the people who usually do this kind of activity off chain. So I think there's actually a lot of really exciting stuff happening on our side to keep an eye out for, that I think will really help drive that key point I mentioned earlier in the conversation, which is we really need to get real world adoption. The other thing I would say is, right now we are focused on fintechs, primarily in emerging markets. We believe that all private debt should come on chain. And so I think in the next year or so, you're going to see us start really pushing into other verticals and offering new products to people, to be able to have that allocation of private credit on chain.
Awesome. Yeah, I love the idea about the kind of abstracting away the crypto side. I think that's a huge piece, that there's a lot of opportunity to grow in. Let's kick it over to Amos. And yeah, same thing. I would love to hear a little bit about future roadmap, what you guys are working on right now, and any upcoming updates.
Yeah, definitely. We actually just launched our IEO on BitGet not too long ago. Currently, we're also getting listed on a couple top exchanges. I think we're listed on around 5 right now, within our first month, under 1 month. Basically, in the future, we have a lot of GameFi, PvP competitions coming out, in-app games where users can basically earn rewards playing with their keyboards. We're also coming out with an MPC wallet, and basically increased support for MPC wallets, eliminating the need for private keys or mnemonic phrases, which also can reduce barriers for Web2 users. SocialFi is also an encrypted chat functionality that we are launching pretty soon, basically ensuring end-to-end encryption and privacy for users to communicate and feel like their data is protected. And then lastly, we have an SDK basically coming out, where basically partners can embed our SDK and use our exclusive privacy keyboard within their own apps. And we've gotten a lot of traction from a lot of different GameFi projects, play-to-earn projects that have running games, but they don't really have a chat room or anywhere to chat. So using our SDK to kind of integrate with a lot of different parties.
Awesome. A lot of cool things you guys have, kind of spinning up. Yeah, I would love to pass over to Brian. Same thing, right? Future roadmap, any upcoming updates that you can share with us?
Yeah, a lot of our companies are constantly putting out news. So on LinkedIn and Twitter, you can follow me, Brian J. Esposito, for all these updates. But a lot right now is focused on these real world assets and the companies in our holdings and pushing forward on security tokens through INX and now with the reach and power of Republic behind that. And we'll be doing a tremendous campaign around Turncoin, which is the first of its kind, 100% gross revenue sharing digital security through its operating company, Virtual Stacks, and that's the company where people can buy virtual trading cards of people. So we got some incredible icons as supporters and ambassadors. And we're going to be doing a lot of media campaigns through traditional trade magazines, financial publications, magazines, newspapers. We're going to do a ton of education on what this is, because that's, again, the next most important step is putting out so much information and support to get people to feel comfortable about getting behind these types of RWAs and these new ways of putting money into companies and projects and getting people to feel safe, secure, and believe that it's well worth a portion of their investment portfolio.
Lastly, would love to pass it over to Edwin. And same thing, right? Future roadmap, any upcoming updates you can share with us?
Yeah, future roadmap. We're deploying next week our testing environment, so a sandbox, so everybody can use our token suite solution for the digitization of assets. So that's a big milestone because that way we don't have to go for a private demo. So we believe that we're going to scale operations by clients being able to test how it works, our project, product, and then they can get more familiarized with how they can get onboarded into the token economy. And we also deploying a marketplace of service providers. So we focus on the technology layer, so the kind of like the functionality dashboards and whatnot. And in case they want a service provider, we have over 70 players, law firms across the globe, financial advisors, marketing, so whatever they need in case they require a service, they go through our marketplace and see the curated list that we have been building over the past 2 years. So that's also kind of like a huge milestone that we believe is going to ease the burden of us kind of like trying to always be the advisor to the projects, because that's not scalable. So we're very much looking forward to that. Yeah, we're listing on Bitmart next week and another couple of changes. So it's kind of like now it's kind of like just pursuing or finishing kind of like our first real good milestones that we have. And then on the second half of the year, obviously we're already starting the second half, but let's say the Q3, Q4, our focus is going to be from the builder side, kind of like pursuing that management of equity, because we have a couple of evergreen funds that want to get tokenized to us, and they're trying to establish or passing us their know-how as their needs occur, not just for their investment vehicle, but also for like their portfolio. So we're having a lot of variables as to how we have to digitize and tokenize equity, but also kind of like providing them the functionalities as to the everyday pain. So on-chain, we can resolve a lot of the hurdles that founding shareholders and VCs and crowdfunding have to establish. So it's exciting times, and basically we just want to pursue and continue building in the space of tokenization. We're big believers in it. If not, we were not building. And hopefully 2024, we have a couple of more great news, and the market itself changes, because when the positive sentiment happens, the securitization and tokenization already secures a great spot. Then obviously people will get more interest and institutionals as well. So looking forward to a positive outcome for next year.
Awesome. Thank you. Thank you for sharing there. And, appreciate, again, everybody's time. I think that kind of brings us to the end of our time today. One thing before we do leave, I do want to mention again that, all of our listeners do have the opportunity to participate in our Learn to Earn program and collect stamped NFTs through Bitmart NFT program. Stamp NFTs are non-tradable NFTs that act as a proof of participation that can be exchanged for a tradable time capsule NFT. For every 3 stamp NFTs you collect, you can redeem it for 1 time capsule NFT, which may contain token prizes worth up to 50 USDT. And you have the choice to open your time capsule NFT or list them for trading on the Bitmart NFT marketplace. So you can check out details in our pinned tweet. But again, really appreciate everybody in the audience taking the time to chat, and really do appreciate all of our guests today for taking time out of their busy days to join us. Once again, we had Doug Leonard, who is the CEO at Hifi Finance. We had Jason, who is the head of BD at TProtocol. We have Aaron, who is a contributor at Goldfinch. We had Amos, who is a core team member at TypeIt. We had Brian Esposito, who is the founder and CEO of Esposito Intellectual Enterprises. And we had Edwin Mata, who is the CEO and co-founder of Brickken. So appreciate everybody taking the time to chat with us today and hang out with us today. I think there was a lot of incredible information that was shared today, and a lot of really great perspectives from people that are working inside and building kind of this next era of tokenization and tokenizing real-world assets, connecting the on-chain, off-chain world. So appreciate everybody's time. And this was another episode of Bitmart's Off the Chain Twitter Spaces. So appreciate everybody's time, and we'll see you guys next week. Thank you again.
Thanks so much.
Thank you.
Thank you, everybody.
Thank you.